Tech M&A activity in the MENA region was healthy, with 49 deals made during the first quarter of 2025, on pace to easily exceed 2024 levels. The wave of deal-making in recent years indicates that the industry is consolidating. Larger rivals are scooping up smaller peers to provide those firms with additional resources to accelerate growth. Large talent pools can be found in the MENA region, with Turkey having 245,000 active software developers and 40,000 freelance programmers. The Turkey open source platform is fostering the export of open source software products by increasing the number of companies offering qualified software developers and open source software support services. Pivoting to Egypt, the country's Digital Egypt Pioneers Initiative is offering training programs and workshops in technical fields to upskill the country's workforce. That includes allocating 4 billion Egyptian pounds annually to train 5,000 professionals in innovative fields such as AI, cybersecurity, programming, and digital design. Acquirers are eager to buy companies developing complementary products that they can incorporate into their portfolios, and firms that serve as a springboard for regional growth. The 4 trends driving tech M&A activity in the MENA region include AI, market consolidation, immersive technologies, and FinTech. Starting with our first trend, AI. This technology is being leveraged to ensure everyone has access to quality financial services. Showcasing this trend, Masira Holding, an Egyptian AI-powered financial services provider catering to low and middle-income individuals and micro, small, and medium-sized enterprises, was pocketed by UAE-based 2.0 in February to expand financial inclusion to underserved groups. Pivoting to our second trend, market consolidation. The wave of M&A activity in recent years indicates that the industry is consolidating as larger rivals scoop up smaller peers. Highlighting this trend, a UAE-based Alchemative, a provider of e-commerce and digital retail solutions, was picked up by the Pakistani company DevSync in January to support growth in the e-commerce market. Our third trend is immersive technologies. Enterprises are seeking ways to incorporate more engaging technologies into the daily routines of consumers. Illustrating this trend, Pubbles, a Saudi Arabian social networking platform that facilitates the creation of virtual communities, was sold to another Saudi Arabian company, Mush Social, in February to expand its user base and digital presence. Lastly, our fourth trend is FinTech. Managing cross-border transactions, analyzing risks, and monitoring fraud require modern financial solutions. Showcasing this trend, Paynet, a Turkish financial technology company, was picked up by the Turkish company EasyCo in February to deliver a broader set of offerings, including collection solutions and B2B payments. Companies that map to any of these 4 trends are seeing incredibly robust demand from buyers who are eager to grow their exposure to the MENA region's vibrant tech landscape. The region's tech industry is consolidating, and companies must position themselves accordingly as competitive pressures ramp up. Large government initiatives are encouraging the adoption of AI technologies. In Saudi Arabia, the country's $100 billion Project Transcendence seeks to turn the country into a major hub for AI and advanced analytics. The initiative will focus on building data centers, supporting startups, and expanding AI infrastructure to nurture domestic growth and to make its technology sector more competitive for exports. Alphabet signed an agreement with Saudi Arabia's Public Investment Fund involving joint research on Arabic language models and Saudi-specific applications. To further advance Arabic language models, Alphabet and the Public Investment Fund intend to enhance the capabilities of Alphabet's Gemini AI family by combining Arabic datasets with Alphabet's. Local businesses will be able to connect these models to their systems to build sophisticated Arabic language AI agents and applications. The new AI hub could add $71 billion to Saudi Arabia's economy over 8 years. Increased AI adoption would support the creation of thousands of highly skilled direct and indirect jobs. Now onto the research team for the regional report.
In the first quarter of 2025, M&A volume in the MENA region was healthy with 49 deals seen, up 25% from the same period in 2024. Strategic and financial acquirers were active in this space as 12% of transactions were made by private equity buyers. Only 22% of MENA transactions disclosed their deal value as buyers kept their M&A strategies private. Total disclosed deal values reached $1.4 billion. Looking at VC funding, these investments have dried up in recent years after peaking in 2022, and that trend continued throughout the first 3 months of 2025. Companies have instead been encouraged to turn to M&A strategies for growth and liquidity. During the first quarter of 2025, 39% of MENA tech M&A deals involved companies developing customer relationship management offerings, followed by IT services and market intelligence providers at 20% and 18% respectively. The vertical application space also saw significant deal-making activities. During the first 3 months of 2025, the median disclosed M&A transaction volume was $40 million. The highest disclosed exit revenue multiples during the first 3 months of 2025 were spotted among target companies providing application software at 4.3 times. Interestingly, 51% of sellers were using a SaaS business model, and impressively, at least 31% were developing deep tech such as AI. Looking at sellers by geography, 43% were from Israel, followed by the UAE at 19%. Additionally, Turkey and Egypt were each home to 14% of sellers, followed by Saudi Arabia at 10%. As it concerns the geographic location of buyers, 25% were based in the U.S., followed by Israel at 16% and Saudi Arabia at 12%. The UAE, Turkey, and Egypt were each home to 8% of buyers. Outside of the MENA region, North America and Europe were major M&A hubs, and deal-making remained highly international, with 55% of transactions being cross-border. 2 companies topped the buyer's leaderboard: cybersecurity company CrowdStrike Holdings and intelligent software solutions provider T2, which each closed 3 deals, followed by other strategic buyers Fowry, Chainalysis, Salesforce, Modern Times Group, Stagwell, Swayfunded, and Teneal, which each acquired 2 companies. Now let's look at some of the largest recent tech M&A deals in the MENA region. In January, Saudi Arabian IT services company Theika was picked up by Elm for $905.1 million, reinforcing Elm's position as a national provider in the digital services space. Also in January, Israel's cyber risk management software provider Vulcan was pocketed by an American cybersecurity exposure management software provider, Teneal Holdings, for $150 million. The acquisition seeks to unify security visibility, insight, and action across the attack surface. In another January deal, cloud-based infrastructure-as-a-service platform provider Spotnist was acquired by software license management software and SaaS developer Flexera Software for $100 million. The transaction expands Flexera's cloud financial management offering into a suite of AI-powered FinOps technologies. Turning to recent representative transactions, in January, a gaming platform developer, Paxi Games, was acquired by casino video games developer W Games for $28.1 million. The acquisition will accelerate growth by expanding Paxi Games' portfolio with exciting games and reaching a broader audience. Also in January, AI-assisted virtual mental health platform developer Alea Health was picked up by online curated AI medical library Treatment AI for undisclosed sum. This acquisition is in line with Treatment's vision to implement conversational AI across healthcare delivery. Riverwood Capital Management acquired an AI-powered dynamic pricing platform for retailers and brands, QuickLizard, for $40.2 million at 4.3 times revenue in February. This strategic acquisition is set to drive AI-powered pricing innovation for enterprise retailers. To summarize, during the first quarter of 2025, there were 49 tech M&A deals in the MENA region, up 25% from the same period in 2024. Strategic and financial acquirers were eager to grow their exposure to the region's rapidly evolving tech landscapes, with private equity firms representing the buyer in 12% of these deals. Venture capital funding for tech companies in the MENA region peaked in 2022 and has declined every year since then, a trend that continued into the first 3 months of 2025. Furthermore, venture capital deal volumes have also dropped considerably in recent years. Companies have instead been encouraged to pursue M&A strategies for growth and liquidity. Companies operating in the CRM space were highly sought after, representing 39% of total transactions, followed by IT services at 20%. There was also substantial activity seen in the market intelligence and vertical application spaces. Deal-making remained highly international, with 55% of transactions being cross-border. The U.S. was home to 25% of buyers, and others located in the United Kingdom, India, South Korea, and elsewhere.